Well, today I'm going to address this opportunity in the markets, which refers to an opportunity that I already addressed in video on demand, live streaming, collaborative live trading. And I'm going to tell you a real story based on facts, and you are going to understand why I doubled the investment position in this stock, in this company. And I believe that is a very good idea for you to listen to what I have to say, not only because what I said already, it has been proven to offer to investors a tremendous amount of money, my friends, by disregarding, completely neglecting, doing the opposite of all these incompetent stock analysts, that they continue spamming the web with articles, paying the media to spam the web with articles containing nonsense content, criminal content in fact. And so you are going to understand my reasoning and why I did it, and zero risk, the concept of zero risk, which is extraordinarily important and which is addressed in our training course. The opportunity that I refer to, it is in a company, Chinese tech player. Once again, I repeat that there are comments with regards to this stock. Which is the Chinese Youku, the equivalent to Youku. I'm not going to repeat the comments that I made before, which are public. You find it on social media channels, on the website. I'm going to refer to a real story where once I posted the video, the title, Be Aware of Deutsche Bank Stock Ratings, I received a phone call from an individual that he claims to have a large short position in Youku. And by saying that he believes in Deutsche Bank, and by believing in Deutsche Bank, also he believes that the stock is going to plunge. Well, I have a completely different opinion, so by following the instructions that I already published in Youku, and I'm referring to the instructions already available as video on demand, where on the chart you see that I drew a line, a blue line, with regards to the channel in place. That video, it was posted or made available when shares, they were trading around $20. After I had that conversation with that individual, the shares, they pulled back to $19.30, and I decided to double the size of the position, the existing one, since the very bottom, the $12.17, which is the position that you had the very bottom, all right? And why? For the reasons that I mentioned before on the video. Deutsche Bank is wrong about it. They are all wrong about it. All of them, they have sell and strong sell ratings. And so, the other thing that I want to say is that the shares, they pulled back a bit, using that same channel, that blue line, my reasoning for you to comprehend why I doubled the size of the investment position is you have to always think about what the other side is doing. And so I'm going to give you an example. Let's say that I wanted to open a short position in Youku. to open a short position in Youku at $19 or 17 or 20 there is only one reason to open a short position. It's not because the stock is going to pull back $3. I'm not going to open a short position just because the stock can go back to 17. Or I believe that the stock is going to test again the lows. Or, and I already referred on the first video that I don't believe that the stock, in my opinion, is going to test again anytime soon the lows. Or in other words, that low, the $12, as I announced it to be the bottom and my downside, to be eventually, in fact, the long-term downside in Youku, as it was the case of 35.38, the long-term top in Youku, which I consider that the stock is not worth that. I consider that new downside in Youku to be $18 an hour. And so if the new downside in Youku is $18 an hour, what, I'm going to sell short the stock at 20? Because it can pull back to $18 an hour, or even 18, does not make sense. So if my new downside is $18 an hour, at $19 an hour, I double the investment position. Having in mind what I said in the first video, that the stock could eventually go on a breakout of the $20.30, which is the pivot, to 23 to $26 an hour, eventually. Whether the stock is worth that or not, it does not matter, because I'm going to explain here how the reasoning it works. If you want to sell short a stock, you have to have at least, I would say, or to believe that the stock is going to move $10. I would say, 5 to 10, all right? Otherwise, why are you selling short the stock? So, when I bought and I covered a short position in Youku at that price, $12, why to remain short the stock? Why? Because, it's going down to zero? No, it's not going down to zero. It's going down to 9, but, so you have to make the decision. We made the decision. We upgraded the share to strong buy, without knowing, in fact, whether that would constitute the bottom, ultimate bottom. At the same time, we also know that we were the only ones doing it. That means that everyone else, since they missed the tops and the bottoms, they are going to be forced at some point to buy the shares. And probably what is happening is that most of them, they are short the stock. There is a very high short interest in Youku. And since I announced that in my perspective, like I did several months ago, when I announced the cons to be one of the best stocks for 2015, when I created the video, Youku, the best Chinese player for 2015, the title, it says that, is explicit, no? It's clear. So I doubled the size of the investment position. Because I know that most people, they are always looking for the bottoms and the tops. But and what happens in the end is that they are going to be forced to do something about it at some point. And they are on the wrong side of most of the time they are on the wrong side of the trend or the move. They are forced to do it later on. So whether this explains the reasoning. This to say that if my downside or new downside in Youku to be $18 an hour, probably, it is not worth, like I said, to sell short at 20, right? Does not make sense. So you need the stock to move higher. Because if you want to sell short, you need the stock, a difference of $5 to $10. Even if that does not exist, in that case, my friends, There is no point to sell short, at least as a swing trade, because one thing is the short-term trading, other thing is the mid-term trading. If for some reason you see the stock, in the future moving to $26 or 28 or whatever, and then Wall Street upgrades, if that happens, maybe then you want to sell the stock, the shares, or to sell short. But to be selling short, like this guy that called, believing, he's saying, I believe in Deutsche Bank, I'm on margin, and you are going to lose all your money if you don't sell now. Okay, I doubled the size of an investment position, you are on margin, let's see what happens. And when I say that how to get free picks, it's precisely like this. You pick up the phone, you listen to what these guys they are doing, and you do the opposite. It's very simple. Once again, this is the strategy that we are following, and without any risk whatsoever. Why any risk whatsoever? Friends, for those that they have been listening to what I've been saying since IPO in Youku, the profits are unbelievable. So we have been investing and trading Youku since the very beginning, and every call that we made in Youku, it happened. So why I'm concerned with the day that is not going to happen? There is no risk. The total level of accumulated profits, which is the concept that we use and explain and describe in the trading course, is very clear. So the reason, it is always the same. There is a coherence. And this is not about, where is going to be the top in Youku or the bottom. It does not matter. It is about also what is happening in the markets. And so I'm going to finalize by saying the following, which is extraordinarily important. You maintain a long position in a stock while it outperforms the market. You maintain a short position in stock while it underperforms the market. Very simple rules that they have been addressed here thousands of times. Moreover, if you look at the action in a stock, and that was the case, why did I double the size of the investment position? If you look at the action on the table, and the Qs, that is the power shares QQQs, and we trade or invest in the markets according to the action in the Qs, DTFs, not only DTF, the Qs, but for example in financials the ETF is the different one, in the housing market it is the ITB, so gold, different ETFs and so on. So if you're the stock where you have a position, if the power shares, the Qs, are selling off or pulling back, and that stock is not pulling back, as it happened in Youku, something is strange. There is a very high level of resilience, right? So I decided to double the size of investment position. And so my average became the difference. So you just have the $12 and plus something, plus the $19 and a half, divide by 2, and you have the average, right? And that average, it is nevertheless a price, gives you an average, the result, below my downside. All right? In the sense that I believe that Youku has further room to go, and while that channel it remains intact, and I repeat that by breaking the pivot $20.30 to be the key, because the most conservative target, and I always when I invest in the markets, I'm conservative. You see that I don't pump or dump stocks in the sense that I'm not there saying, this is going to crash, in most cases, or this is going to the moon. I don't sell those ideas, okay? I have conservative targets. Sometimes, on the short side or on the upside, but we have targets, the concept of downside and upside, precisely to give one a clear idea what to expect But that idea has to be worked on. It is a process. And you have to follow the process. How do you follow the process? By looking at precisely these, what appears to be to you details, which are not. I'm referring to the action in the power shares QQQ, whether the stock pulls back or sells, if the Qs they sell. That was not the case. The selling interest, the volume, which is the most important indicator, the selling interest very low, so I doubled the size of the investment position in Youku. Do you understand the reasoning? Everything that I say in the trading course, everything that I say in my videos, everything, there is always a coherent approach. Without the need to, when or how much this stock can rally, how much this stock can sell, right? This has been quite clear. So here it stays my lesson on and the real story about Youku.